Hello, everybody, and welcome back to TraderInterviews.com. Thanks very much for joining us for another show this week. Our guest today is Doug Hirshhorn, Dr. Doug. He's a PhD, and you've probably seen him a couple of different times. He's been all over CNBC. He's been on the Today Show talking about peak performance and helps traders basically become the best that they can be in terms of their trading. We've all heard that psychology is a huge part of being a successful trader, and some of the best traders that I've talked to here on the show too agree with that and say, you've got the best strategies in the world. If you don't have confidence in your trading ability and just an overall mental attitude to approach the markets, you're going to have a tough time succeeding. So we're going to talk to Dr. Doug today about that and find out what he has some advice for the newer traders as well. So Dr. Doug, thanks very much for joining us on the show today.
My pleasure, Tim. Thank you.
One of the first things that I usually ask, or get asked actually, when we're talking about trader psychology and confidence in a trader is, how do I develop a confidence in my strategy? In other words, the question that gets emailed to me is, ask your traders how long it took them to become confident in their strategies. And you've dealt with a lot of traders. So what's your answer to that? How long does it take a trader to really get confident and develop that skill as a trader?
The unfortunate part that I find with most traders is that their confidence is linked to their P&L. So they'll say that their confidence starts to pick up and increase when their P&L starts to show positive returns. So the time frame could be anywhere from a couple days to a couple months to a couple years. It depends on the individual. I don't like that approach, though, and the reason why I don't like that approach is because trading is a very unique occupation. You can do all of the right things and still lose money for factors that are outside of your control, and it becomes psychologically conflicting for an individual to have to deal with the fact that they feel like they did the right trades, but the market's not paying them for those decisions. So they're focusing on, if they're focusing on an external reward system, meaning just the P&L, they're actually in for a very long and painful experience as a trader, as opposed to what they should be doing is focusing on internal process stuff. Am I making what I call high-quality trades? Am I making trades only when I have edge? That's the critical factor there. If you have edge in a trade, then you're making only those trades and staying away from the ones that are kind of like a crapshoot. You're not sure if this is going to make money or not, but you're afraid to miss out, so you're going to put something on.
Right. And so are they finding that patience to wait for that trade to come along? Is that a big part of getting that confidence?
It is. Well, patience for waiting for it to come along, but the first step really is to identify what your competitive advantage is as a trader. So one process that I take my clients through is to have them map out and identify what is their ideal trade, and then break it down to an A, B, and C caliber trades. Your A trade is the trade where all of your perfect data points line up in line, and this is your best trade. You feel like you have the most confidence and most possibility of generating a return with that scenario. And then your C trade is one where you have markedly less of those data points filled, and the B trade is the one in the middle. That criteria of A, B, and C is what I call the matrix of edge trades, and then a trader needs to know when to make those trades based on information so that they have the right opportunities to make those trades. And
is it a matter of finding one system that spits out these trades and says, okay, here's an A trade, here's a B trade for me? Because there's so many choices now these days about what to trade in terms of just pure markets. I mean, how do they go about finding where those A trades, B trades, and what do you suggest there?
Well, it depends on the trading style. If they're more of a technical trader, or a fundamental trader, or a price action trader, it's not a question of there's only one style that works. It's more about finding out which trading style fits your personality profile. So one thing I highly recommend for traders is to do a personality assessment, or hire someone to give them a personality assessment and identify what their areas of strengths and weaknesses are and how they're hardwired. Once they know that information, then they can look for a trading system and process that actually complements their personality. I'll give you a good example. If you're an individual who actually has a very high level of intuition, you trust your gut, you tend to go with your gut, and it tends to make good decisions for you, then you want to be a trader that maybe is looking more at price action and things that involve quick decision-making process. And on the other hand, if you're more of an analytically minded person, you like to have slow depth in process, you like to look for things to build up and grow over time, then you might be more of a fundamentally based person doing more analytics. Either way it can be profitable. What I want to point out, though, is that if you are an intuitive-minded person, the biggest mistake you can make as a trader is to try to trade fundamentally driven. And vice versa, if you're an analytical, long-term-minded person, the biggest mistake you can make is trying to trade short-term price action. That's when I see traders get into the most trouble, is when they start to conflict with their personality. They start to trade different than how they're hardwired as a person. So understanding how you're hardwired as a person helps you identify your specific trading process and then your specific trading style. As far as whether you overlay it with technicals or fundamentals or pure price action or reading the tape or reading the news, really I find there's very little variation in that as far as differentiating success and failure. The critical piece is to be able to have a process and a defined strategy that's in line with your personality, and then to replicate that process over and over and over again.
Yeah, that's good. We've talked on the show before about the fact that you've got to find a specific market that matches your personality. Someone who doesn't enjoy being in front of the screen constantly probably shouldn't be trading off a tick chart or a 1-minute chart. So it kind of sounds like it's a bit in line with that.
Yes, I would agree with that.
Now, one of the other things that I've seen a lot more today is with Twitter and blogs. You've got a lot of people putting out their trades, and I was on StockTwits earlier today, and they were mentioning there's the stream of Twitter's tweets coming by where people are saying, "Hey, just made $2,000 on this, just made $4,000 on this," and I'm thinking, man, I've made about $400 today. Right. There's this idea that I should be almost inadequacy, that I should be doing as well as some of these other traders here. How do I deal with kind of all these other traders saying they're doing so well and maybe I'm not doing so well, or do I just ignore that, or what's your advice?
My advice is to not allow yourself access to that information if you find that it's a distraction to you and that it's actually causing you to feel like you're missing out on things. You need to discontinue the access to the Twitters and that stuff so that you're not getting that flow of information. That's the biggest mistake that I see people making when they have a personality trait that's more of an extroverted, where they feel they need to have that experience with social interaction. Is they start to get the flow of information, they start to have this tremendous fear of missing out. They start to see what other traders are doing or hear what other traders are doing, and they say, oh, wow, I can't believe I'm missing this opportunity to make this and do that. And then as a result, they end up making bad trades on their own. They end up making bad trading decisions, trades that are without edge by definition. They're making trades that they're not well thought out because they're driven by the fear of missing something, and they're not taking the time to follow their own process and decision-making experience. So if you are one of those people that's calling in saying, you know what, hey, I get distracted by hearing all this flow of information from people making money, I feel like I'm missing out, my advice is cut the cord. Disconnect yourself from the flow of information and you'll be much more successful. I've sat in trading rooms before with professional traders that actually are wearing headphones or wearing noise canceling earphones so that they're not distracted by the people around them making trades. They're in a group environment, but they found that they actually were distracted by the group noise and the group opinions rather than just being able to focus on themselves. Other traders have done very well in group environments, and they feel that they get benefits by hearing other traders and what they're doing.
Would you recommend for a newer trader, though, maybe that they join a chat room or try and get picks from somebody else? Is that a good way to start? I mean, I hear that you shouldn't follow, obviously, somebody blindly, but at some point you got to get started somewhere, I guess, right?
Yeah, observing other people and keeping track. And if you're a new trader, the good suggestion would be to observe other traders, good and bad, take notes and document what they're doing well, what they're doing poorly, and seeing their personalities and how they match to your personalities and what might be similar and different. That might help you with identifying some things that make sense for you. But to think that you're going to sit in a chat room with other successful traders and then just pick up their strategies and develop their skills is not really an accurate way that it folds out. But if for no other reason, because we're all hardwired different. We're all different people. And what works for one person is not necessarily going to work for another person.